Welcome to the latest Motley Fool scoreboard. I'm on in Schiavone. We've got longtime fools Anthony Schiavone and Matt Argersinger giving a 1 to 10 rating to apartment REIT AvalonBay Communities, ticker symbol AVB. They're located right here in Arlington, Virginia, and I walk by many of its properties on my morning walks. As always, we'll rate AvalonBay's business, its management, and its financials. We'll talk valuation. If there's time, fools, we'll play Armchair CEO and we will top it. All about 12 minutes or less. So let's get to it. Anthony, how do you rate the strength of AvalonBay's business, including factors like industry, competition, scale of 1 to 10? 10 is invincible, 1 is hopeless.
Yeah, I'm going to go with a 7. So AvalonBay, they are the country's largest public apartment REIT with an enterprise value north of $40 billion. They own primarily Class A properties, so your highest quality properties. And they own 70% of their portfolio in suburban markets where barriers to new supply tend to be the highest. What AvalonBay is really known for is their development expertise, and I think that's a big competitive advantage for the company. More than 50% of their existing portfolio was developed internally, and I think their scale and their in-house development, I think that's really important because it leads to lower CapEx requirements over the long term. They also have more buying power from their suppliers because of their big scale. And newer buildings need less maintenance, and that means more money flows to the bottom line, more money can be returned to shareholders. And also with their size, they have a lower cost of capital too versus some of their competition. And just lastly, they're one of the best REITs at what's called capital recycling. So it's selling lower returning assets to fund higher returning acquisitions or developments. So with the strong score there of 7.
I'm also going 7 for all the reasons Ant said. He nailed all the key advantages. I would say there's just a real pricing power for AvalonBay, given the barriers to entry, given their appeal to high-end renters who are looking for those kind of nice urban or high-end suburban locations, lots of amenities. But I would say that's also why I'm probably not giving it a little bit of a higher score because of their focus on the high-end market. They are exposed to changes or headwinds to that demographic. And what we've seen, especially post-COVID, is the high-end renter is often a white-collar worker who has much more flexibility as to where they can work. And so I think that's a little bit of a risk for AvalonBay, although they've managed it very well. I would also say the urban environment that they in the suburban close-in environment they work in is also susceptible to things like rent control and more government regulation. That can add some risks and some costs to their business model as well. So that's why I'm going 7.
All right, and let's move on to management. 10 is Warren Buffett, 1 is Homer Simpson.
Yeah, I got to go with another 7 here for management. Their CEO, Benjamin Schall, he joined AvalonBay in 2021, became CEO in 2022. He previously served at another publicly traded REIT before joining AvalonBay. And AvalonBay's former CEO, Timothy Naughton, he served as AvalonBay CEO for 10 years before Schall joined, and he still remains on the board. So I like that. He's a great track record as well as CEO. I also like that their management team, the shortest tenured named executive officer in the company, joined the company in 2003. So this management team has been here for a long time. They have a great track record. And if you look at their capital allocation over the last few years, it has been phenomenal. So if you think about 2020, right, when their stock got hammered because of COVID, they ended up selling properties and using the proceeds to repurchase shares at depressed prices. 2021, 2022, when their stock was doing really good, they issued shares when they were trading at a premium to their net asset value. So they're really good at disposing of low returning properties, using the proceeds to either acquire new properties or repurchase shares. So yeah, they've just been really good with that. I only give them a 7 just because Ben Schall has only been with the company for a few years. So I'd like to see a little bit more of a track record from him moving forward.
I'm going a little lower. I'm going with a 6. And that's really because while I think Schall has extensive experience at publicly traded REITs, I'm not sure it's the right experience. For example, he was the CEO, longtime CEO of Seritage Growth Properties, which is mostly a retail-oriented REIT that is right now in the process of liquidating itself. It's run into a lot of trouble. So I'm not hugely confident in him. I am glad, as Ant mentioned, that Timothy Naughton, longtime CEO, is still on the board. He's the chairman. That gives me a lot of confidence, but I just don't think Schall is the right answer at CEO. We'll know more in a few years, but right now I'm going with a 6.
Saratosh, my portfolio weeps.
Mine too.
Financials, and 1 to 10. A 10 is a fortress. A 1 is yikes.
Yeah, I'm going to go with a 6. So their balance sheet is awesome. So they've had an A credit rating since 2016. They're one of only 8 or 9 REITs to have an A credit rating, and that really helps with their borrowing costs. That's really important for REITs. If you look at their debt maturities, they're well staggered. One thing I'd like to look at is if their dividend payment is greater than their debt maturity in any given year. I think that's a really good sign of a strong REIT, because it shows that the company's still in control of their future, not necessarily their lenders or the banks that are lending them money. I'm only going to give them a 6, though, because their dividend growth has been very disappointing. We mentioned all of their competitive advantages, whether it's the balance sheets, their assets, their capital recycling, but their dividend has only grown 47% over the past 10 years. So I would have expected that to be a lot higher. So that's why I give it a 6.
I'm also at a 6. Again, for what Ann said about, I think they've been excellent capital allocators. I think balance sheet's in great shape. I would just say I agree with Ann. The dividend growth has been lacking. And if you compare AvalonBay's dividend growth and FFO per share growth versus other multifamily REITs like Mid-America, Equity Residential, Camden, AvalonBay's kind of on the lower end. They haven't been able to grow their cash flows and their dividend at a rate. It's a rate comparable to other REITs. And so at the same time, I think the debt to EBITDA ratio is probably a little higher than it could be lower. It's a little bit on the high end of its peers, but not a threat. But I'm sticking with a 6.
Matt, let's talk valuation. How well will AvalonBay's stock do over the next 5 years, and how safe is it? Keep in mind that 10 is a sure thing, 1 is a lottery ticket.
I'm going to go on with a 5 to 10% range, but I'm pretty confident. I'm giving that an 8. I would have gone higher on my returns if we were doing this show earlier in the year, but the stock has had such a nice run, especially over the last several months. If you look at management's latest guidance for FFO per share for this year, it's on track to earn about $11. That puts the stock right now at about 20x that figure. A little bit of a premium valuation, which I think AvalonBay deserves just based on the quality of its assets, its competitive advantages. But I don't think that means there's a whole lot of upside unless they kick that FFO per share growth into a higher gear, which I don't really see coming. So I'm sticking with 5 to 10%.
Yeah, I'm also going to go 5 to 10% with a safety score of 8 for many of the same reasons Matt mentioned. I think the company trades at a slight premium to my estimation of its net asset value, which is probably where it should trade. But if you look at its dividend yield of around 3%, it's growing that at a mid-single digit rate. So I think a high single digit annualized total return is a reasonable expectation for this kind of company. And you think about safety, right? They own the highest quality apartment buildings in the country, which actually makes it, I think, more resilient during downturns. Because if there's a recession, they can keep their occupancy high. Rent growth might fall, rents might fall, but their occupancy is going to be high. That's important. They have one of the best balance sheets of all REITs. And then, people are always going to need a place to live. So I don't think you need to worry about something like AI disrupting this business. So pretty strong safety score there.
Skip Armchair CEO, in the interest of time, and go straight to everyone's favorite topic. Matt, is there a company in AvalonBay space that you like better?
I think Ant and I might see eye to eye on this one as well. It's Mid-America Apartments, ticker MAA. I just like Mid-America's the more diversification of its assets. I like their geographic location a little better than AvalonBay's. They're mostly in the Sun Belt, which I think is going to lend itself to a little more growth, a little more pricing power in the long run. And boy, if you like AvalonBay's management track record, Mid-America is awesome and just one of the best management teams I think in REITs, and so it's hard to top MAA.
Yeah, I'd also go with Mid-America Apartment Communities, Matt, for everything you said, and the dividend growth for Mid-America has been a little bit stronger over the past couple of years.
I thought you all might pick that one. We've done it before, and I know it's one of your favorites. Behind the scenes, these guys run our dividend service, and a lot of times the companies we do are based on that service. So thank you to both and to Matt. They've given AvalonBay an all right overall score of 6.5 out of 10, short of that 8.0 that would force me to own shares. The outstanding feature here was safety, which got an 8. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is the kind of boring business that Peter Lynch and Warren Buffett perk up for. Till then, Fool on. A little fun fact, like when I was right out of school, I got sucked into a fantasy baseball league. These guys were pretty hardcore. But the guy who ran it, or one of the guys, was worked at Avalon Bay. Still works there to this day. And I think we did the draft in one of the corporate offices.